Hello, everybody. Welcome to Thursday. The S&P 500 was up a little bit more than 1% today, really close to a new all-time high as far as the close go. The all-time high was 61.18. We're at 61.15 today. So, really close. The market is actually showing a lot of resilience. I said this yesterday. Even though we had a higher than expected inflation report, the market, didn't end up down that much, kind of rallied throughout the day from a lower point. And today it just kind of took off, really based on the tariff delays. So there was a comments made that tariffs would start today on these reciprocal tariffs, where somebody has a tariff that's higher than what we have on the same, item. And so lo and behold, it turns out it's actually going to be sometime in April that they might be doing this. So this is sort of like what happened with the Mexico, Canada, China situation. So we had that news on a Friday. We're going to have tariffs starting the next day on Saturday. And it turns out it was really on Tuesday. And by Tuesday, they'd already negotiated away the tariffs for Mexico and Canada, at least temporarily. Market, kind of did much better with that after all. And so, it's becoming an issue where you have to wonder if the tariffs are just a negotiating tactic, and so you have these situations where, okay, it's going to start some point in the future. It gives the time for some negotiations to happen. The market does have to take seriously the fact that some of these could stay. The China tariff that was announced at 10% still seems to be in play. It's a little bit fuzzy as to what products that was on and what have you as far as that goes. But nonetheless, we've got the scenario where the market's going to have a hard time doing well. But I tell you what, it's been doing pretty well. I've been pretty impressed, actually. Really strong day today altogether. And again, it was a bit of a relief rally without the tariffs. Does show you that the market probably really could take off here even this year in total, and they get something solved on the tariff side, or the market starts to get used to it, or whatever might happen, and then they get through some tax cuts and regulation cuts and things like that. If that starts to hit, the markets would probably take off. So we'll see as far as that goes. There's a lot of moving parts that are happening right now. However, I mentioned this last year. I'll keep mentioning it now. The stock market is on a roll. There's momentum here. There's a lot of dip buying that comes in that's very strong. At some point in time, the market could keel over, but the average bull market is 5 years. We're about halfway through that. The average bull market is about 180,000, 180%, return. And we're sitting at around 70 something percent return since the bottom back in October 13th, 2022. So there's theoretically some room to run here just on a historical basis. And so, this is a sweet spot for the market normally, should be hitting new highs, on a fairly consistent basis. Eventually you get that, bear market, which is a 20% downturn or more. They happen, quite frequently, obviously, every 5 years on average. So I think it's, a situation right now where there's enough momentum in the market to kind of hold up against some of these uncertainties that the market's looking at. Um, and again, if you keep having tariffs, announced tariffs, and then you move the timeline and then they disappear after negotiations, you do that enough, the market's going to stop reacting to it as much. It's kind of what we saw today, even yesterday, as far as that goes. So anyway, not a bad day to be an investor. It's really fun to hit all-time highs. The bond market came back up quite a bit today too, which is nice. Again, kind of a relief for not having the tariffs. A little quick mention on the bond market. It's a little bit different than the stock market. It's looking at this a bit more negatively, mainly because it has an extra responsibility. So, the bond market's also worried about tariffs because they're inflationary. And when you have higher inflation, the Fed might start raising rates, would bring down the bond market, values anyway. So that's pretty straightforward. But also, if you cut taxes, and the bond market doesn't see equivalent savings. So if you cut your revenues and you don't have savings to offset that, you're increasing the deficit. That deficit comes out of the government bond market, which is already pumping out a lot of bonds. And so having to pump out more bonds would be, adding to the supply of bonds without maybe increasing the demand. The bond market's going to struggle in that environment also. So that's where it'll be really important as they're going through this, redoing of the tax situation, to make sure that they have some accompanying cuts that go with that, if that's what they're going to do, especially cuts that the market believe will actually happen as far as that goes. So we're ways away from that happening, but those are the things that are kind of weighing on the bond market beyond just the tariffs and the inflationary situation. I mean, we have inflation already, even before these tariffs. The CPI report that came out, yesterday was a little bit hotter than expected, for example. And the expectation, I will say, I did read today that the expectation for the core PCE inflation number that's going to come out here at the end of the month is actually expected to be lower than it was this last time. So we'll see how that works out. Again, that is the one that the Fed's looking at. But nonetheless, we're in a quasi-inflationary environment. You throw in tariffs in that kind of makes things more nervous for the bond market. And then, of course, you have these, tax cuts that could make for a bigger deficit, which puts more pressure on the bond market. So anyway, that's what's happening there. It's a little bit of a different animal as far as that goes. I actually believe the bond market should be higher than it is right now. In essence, we've had a decrease in rates by a fair amount, and that it might be able to make up some of those gains that it should have had later on this year. Maybe once we get past, once we get used to this tariff thing, see what really is happening there, we get past some of these tax issues and such like that. The bond market could have a better run here too. So yeah, we'll see what happens. So anyway, that's what's happening today. Look forward to talking tomorrow. We have the show tomorrow. Do a summary for what I saw in the stock market at the beginning. That's 12:15 on YouTube's Talk Money with Tom. You can join us. You can ask us live questions if you want, and we'll try to answer them. Thank you very much. Talk to you then.